So here we are. A very good evening to all our masterclass participants. The last day of the month, 31st of August, Saturday evening, 4 o'clock. This brings to our weekend session. We dedicate this weekend session to take a look at the market from the point of view of the weekly charts or higher than that, so that we can find some positional opportunities, and of course before that evaluate the market conditions from a slightly positional point of view. So I have three time frames: monthly, weekly and the daily. This is the Nifty spot and a brilliant monthly chart. Even the Heiken Ashis are holding fine, momentum indicators are fine. Yes, it is stretched, and so it will stay stretched when the markets move up like this. Prices or oscillators which are bounded will stay stretched. So not much of an information coming from that RSI. Coming down to the weekly, the Heiken Ashi language has improved. The Heiken Ashi has given us a nice green Heiken. Slight, very slight hint of structural positional divergences that we look for, but too early to comment on that. Weekly charts also bullish. Coming down to the daily, you would remember me drawing this broadening formation kind of a pattern way back. I'm going to extend this for a little bit more. What surprises me in the last couple of trading sessions is generally when the erstwhile fractal highs are taken out, when prices go above that, there's generally a quick slip. It may not be a reversal, but there's generally a slip. We've not seen that. Once it took out the 25k mark, it's kind of held pretty strong. Friday was around a 90-point gainer for the Nifty spot, and it's holding well. Yes, we can use the same word here. It is stretched. It has been going up one way. At this juncture, one wouldn't have even thought of that a rally of this nature will turn up. But that's the situation. It's a bullish chart across all time frames. One should not look for contrarian short. Should not, unnecessary. The bare minimum sign of weakness will be a slip below the erstwhile breakout level. And the best thing would be to use the psychological 25k mark. Nothing better than that. Use the psychological 25k mark. Only below that you can look for some kind of a follow-through. There is no need to sell the index at this stage. Just because it has gone up is not a good enough reason to sell. Broader markets. If we come to the small cap and the mid cap, now this is where things get a little more interesting than the Nifty chart. Their monthly charts are strong. No problem. It's no problem at all. The weekly charts has just given us a breakout. Yeah, and in these kind of breakouts, especially when the momentum readings are not in your favor, when the momentum readings tend to be little on the slower, on the softer side, the possibility of a follow-through slip, the possibility of a slip slightly more, which is there in the small cap index, which is very much there in the mid cap index, the chart of mid cap index as well. Now, I'm not saying they are bearish. What I'm saying is the signs that this might be a short-term breakout failure and the prices may ease off, cool off a little bit. I'm not looking at a huge correction. It is not giving me enough evidence to call that. But it's there. Whether it will lead to the fall or not, that only time will tell us. But in terms of levels, if you ask me, use Thursday's low. That's important. I don't think so it's going to happen immediately, but maybe. Which leads me to think that if and when the market cools off after this wonderful bounce back, I think it will be the small and mid caps, the smaller size stocks, relatively smaller size stocks, which will face the heat more. Maybe the Reliance and ITCs of the world will not face that heat. Maybe the large caps will hold well. That time will tell us. But yes, small and mid cap is showing very mild signs of that possibility. So is CNX 500. Now coming to the next most important sector, the Bank Nifty. Now, monthly charts are of course bullish. Weekly charts, if you remember, had given us this corrective move, but the momentum did get compromised and it was a make or break last week's green HAGB. You've been following my work and you know that I've been looking or expecting, anticipating this particular sector to support the index, especially the private sector banking pack. So far, so good. I would say the bank Nifty weekly charts is so far so good in terms of the structure. The good thing is it has given us a green icon on the weekly charts, which increases the possibility of further upsides. Daily chart is a first degree sync of the trend, the momentum. Yes, it has moved up and the entire market has moved up. So even if we allow it to cool off a little bit, maybe retest the breakout levels and then take up the next leg up, that can be a possibility. So any drop from here, do not get worried immediately. I would say as long as 50,600, 50, 0 holds, we still should expect a bullish move, particularly based on the higher time frames. So Bank Nifty, I'm staying bullish. If you take a look at the private sector banks now, this is Nifty private sector bank. This more or less mirrors it, so still the same view. But if you take a look at the PSU bank, this is where it gets really interesting because the monthly charts have been slowing down. You can clearly see that from the Heikin-Ashi language. For the last 3 months, the third last month, this was August, this was July, and this was June. The month of June was a volatile one. This range was because of that election results, drama and all that. So for the last 3 months, things have slowed down for this pack. Structurally, it shows like a rounding topish behavior. In terms of our language, we see that there's a trend reversal, there's a momentum reversal, it's a first degree sync. And for the last 2 weeks, it has created range contraction. It has created green HAGB with beautiful range contraction. A classic setup. And the classic setup, only if the lows are broken, a classic setup for the next leg on the downside. So we maintain this cautiousness, prospective bearishness from the PSU bank. It's a prospective. These kind of setups can lead to reversals also. But if I keep an eye on the momentum, if I keep an eye on the trend, I would say the possibility if the lows are breached, the possibility of a downside is much higher than this. That does not mean that the second cannot happen, the latter cannot happen. So PSU bank, I'm not very bullish. Private sector bank, yes, and that can lead to the Bank Nifty going further up. Finance, CNX Finance on the other hand, is also doing pretty good. It was a good week for us. I'm pretty sure that most of our masterclass community members would have generated good returns. Bajaj Finance was a brilliant trade that we managed this week. Coming to the rest of the sectoral indices. Auto. Boring. Monthly is boring because it's been green and up and for months now. So it's nothing exciting on the monthly chart. A little bit of excitement did come on the weekly chart, but it kind of bounced back again. So it's gone up again. But the weekly chart is not in sync. The weekly momentum readings are down. The trend is not. So expect choppiness. We've had choppiness. It's not that we did not have choppiness. We've had down move, down, up, down. So we've had a share of choppiness and I think it will continue. Which means that if you're looking for a long trade from the auto pack or if you find a good short trade from the auto pack, hit and run trades please. Quick. Take the trade. If the trade starts to move in your favor, do not create huge expectation. Get out as soon as possible. Coming to energy. Now energy is that typical slant divergence has become again boring. Monthly charts is very, very strong. The daily chart has improved. Bullish. Yeah, I know the weekly chart is giving this divergence, but the price is just not nudging. The price is just not interested to come down. So we trade the price. We stick to the price. So we'll look for long opportunities and I would say cautiously bullish. Because of this, I'll add cautiously. Finance, we discussed. FMCG. Leave it. Let's not, there's nothing much to take away from the monthly or the weekly chart of FMCG. The daily is the one wherein we have some breakout, throwback. Oh, there is a bit of a structural divergence. What's going to happen? How strong is this uptrend? Structurally very strong. Has it gone up too much? Will it correct? So all these possibilities from the FMCG is there from the daily chart. I would not suggest you to look for shorting opportunities from FMCG. IT and FMCG, we've been predominantly bullish and we didn't want anyone to short that. And brilliant monthly, brilliant weekly, equally brilliant daily. Stay long, please. I think in our masterclass, the trades that we identify from the weekly time frame, we did find TCS way back. I think it's 2 months back. So we've been making good use of this move. So stay bullish, please. Metals. Now remember last week we got this green HAGB, which came after the trend reversal, the momentum reversal. The monthly charts are brilliant, it's strong, but only a slip below last week's low could have opened up for the downsides. No, the index has gone up, the daily chart has gone positive, it is consolidating, so we can expect a breakout, we can expect further upsides. The monthly chart is supportive. Metals is, I would say, will be very similar approach that I just discussed in auto. It is bullish. We need to be little careful more and hit and run trades. We don't want to sit on these sectors. Pharma, there's nothing much. The problem is even the weekly chart is not giving us any opportunity whatsoever. The weekly, last time it consolidated, it gave a breakout. It was a breakdown failure and moved up. Crazy, beautiful move. It's not giving us enough opportunities, any deeper correction. We like to call them thunder setups. It's not coming from the weekly time frame. Do not try to short this. Now the next one is realty. Just like the PSU banking index, realty is also in a short-term downtrend from the weekly point of view, and momentum is down with back-to-back 3 weeks of range contraction and small bodied hiking. Now please don't get me wrong, the monthly chart is exceptionally strong. So it can just come down a little bit. And we've seen that, Oberoi Realty falling and then bouncing back sharp, DLF also. So it's not a great pack to trade right now. The daily is not too sure. The weekly is more on the downside. The monthly is brilliant on the upside. So it's creating a lot of contradicting evidences across 3 different time frames. Ideally, better not to trade. Or if I would like to, take a position, again, the same logic, hit and run, quick trades, 1 or 2 days. I don't have the conviction of holding on to either a long or a short for a week or 2. It's not just there. And finally, consumer durables. Yeah, so consumer durables, FMCG and IT, I think we have clubbed it. We had kept it and clubbed it in one group, saying that just it's too bullish, it's strong charts, so do not look to short them. I can say the consumer durables, with the example of consumer durables, I'd like to share one thing, is if you remember down over here, which was around 8th of August, this zone, in terms of the way we read the charts, this was a brilliant opportunity. If the low had breached, thankfully it did not break, if the lows had broken, then it could have opened on the downside. And there was enough technical evidences and good quality evidences of a breakout, the failure, the pullback, the divergence, anything that you need in a good bowl of soup, it was here, right here. And so this is that particular example when all the readings are really good and the thing which we anticipate, the evidences should have led to a fall, and it did not fall. On the other hand, it goes up. When it kind of reverses, the reversals are generally very, very sharp. Of course, the overall market was supportive. So consumer durables, stay bullish, do not go contra short. FMCG, IT, stay bullish, do not go short. Auto, energy, realty, hit and run trades, whichever way you get, just quick trades in and out. Bank Nifty, private sector banks, finance, predominantly bullish. PSU bank can be a pocket of weakness if the market comes down. If the market comes down, maybe the broader markets will come off more than the large caps. These are the main pointers we take away from our weekly analysis. Before I go to your doubts and questions, one quick look at the global markets, especially Dow Jones and S&P 500 was up 1%. This market also has bounced back beautiful. It's not hit a new life high. This is S&P 500. Is it forming a double topish behavior? I don't know. Long-term charts are brilliant. Short-term charts are weakening. But there you go. Every time it comes down, it falls sharp and it bounces back also very high. So we are midst of a strong bullish market. Level wise, it's holding beautiful above that 25K mark. Stay bullish. Do not look for shorting opportunities. Just because the market is gone up too much, you will feel it's too high. There's nothing like too high in the market. All right. So with this, I will conclude the market and the sectoral analysis. Now, the second thing that I'm going to do is quickly take a look at our open positions and then, of course, your doubts and questions.